If you miss a $500 credit card payment, your financial life is ruined. The banking algorithms flag your account immediately, dropping your credit score into the absolute gutter. Your landlord considers eviction, and you suddenly become a massive liability to civilized society. But if you miss a $500 million corporate loan payment, everything instantly changes. The bank's board of directors holds an emergency midnight meeting to save your failing assets. You are no longer viewed as a liability, but rather as an essential financial partner. This is the fundamental, terrifying asymmetry of how debt functions in the modern corporate world. At the absolute bottom, debt is a heavy chain designed to continuously extract your liquidity. At the very top, debt is a tax-free financial instrument used to print infinite wealth. Welcome to the unspoken rules of debt, categorized strictly by your current personal net worth. Let us start at the bottom bracket, ranging from $0 to $10,000 total dollars. At this level of wealth, debt is an entirely punitive and destructive daily financial force. This is unsecured consumer debt, consisting of credit cards, payday loans, and sudden medical bills. You are borrowing money at exorbitant retail rates just to survive to the next month. The global banking system views you purely as a high-risk extraction zone for profit generation. You pay 25% interest because institutions know you have absolutely no functional financial leverage. If you default on these loans, aggressive collection agencies will relentlessly hound your personal phone. They will garnish your wages directly, and they will efficiently repossess your only working vehicle. You have zero legal protection, and you cannot hide behind a corporate bankruptcy legal shield. You are a raw nerve, completely exposed to the cruel, calculating mechanics of the market. Moving up the ladder, we reach level 2, the middle-class illusion of modern financial success. This bracket ranges from $10,000 to $500,000 in total net worth. You are finally allowed to take on massive debt, but there is a significant catch. The debt must permanently bind you to the traditional 40-hour corporate wage labor market structure. You likely believe that you actually own your suburban home, but you absolutely do not. You are simply renting capital from a retail bank, using the physical house as collateral. You warehouse yourself in this physical asset so you can wake up and commute daily. Your daily corporate labor exists solely to pay the bank their monthly required interest yield. Your debt here is structurally engineered to keep you as a highly compliant, productive worker. You are far too invested to quit your job, but entirely too indebted to risk. Level 3 is where the mathematics of the financial system completely and fundamentally flip directions. This is the $500,000 to $10 million high net worth financial tier. Here, debt transitions from a punishing monthly penalty into a highly weaponized tax-free wealth tool. You are no longer borrowing money to buy groceries or a residential house to sleep. You are borrowing cheap capital specifically to acquire massive, cash-flowing commercial real estate assets daily. You buy a large apartment building using a low-interest commercial real estate retail bank loan. The working-class tenants actively pay down the principal of the heavy debt for you monthly. You pocket the spread between their rent and your mortgage, generating passive monthly liquid cash. More importantly, at this stage of wealth, you actively stop paying any traditional income tax. When your real estate asset portfolios appreciate in value, you never sell them on markets. Selling a physical asset triggers a massive capital gains tax event with the federal government. Instead, you simply take out a massive new loan against the newly inflated asset value. The federal tax code does not ever recognize borrowed debt as taxable personal income revenue. You spend the borrowed millions completely tax-free while you let the underlying real assets grow. This is the foundational legal architecture of the infamous buy, borrow, and die wealth strategy. The bank happily lends to you at 3% because the physical asset serves collateral. Level 4 introduces the $10 million to $100 million corporate offshore shield tier. At this elevated level, you and your massive financial liabilities are entirely legally separated entities. You do not ever borrow money or sign standard loan documents in your own name. You use complex legal webs of limited liability companies and offshore corporate holding shell structures. If a highly leveraged corporate investment goes well, you extract the massive profits into accounts. If an investment collapses under the weight of its own debt, the corporate shell dies. The corporation files for strategic bankruptcy, and the lending bank absorbs the entire financial loss. You walk away with your personal wealth entirely intact, completely insulated from the financial wreckage. You have successfully privatized the financial gains while socializing the massive financial losses entirely legally. The legal system is explicitly designed by corporate lobbyists to allow this exact financial maneuver. Debt becomes a blunt weapon used to acquire smaller competitors and strip their valuable assets. You discard the empty corporate shell, leaving the unpaid worker pensions and debts behind forever. You are playing with monopoly money, and the global banking sector is your willing accomplice. Finally, we reach level 5, the $100 million to $1 billion financial threshold. This is the exclusive realm of total, unmitigated systemic economic integration with central government banks. At this highest tier, the standard rules of personal finance completely and utterly cease existing. You owe the institutional banks so much money that your financial failure guarantees their failure. If you default, you would instantly trigger a localized financial crisis within the banking sector. Because of this terrifying reality, the central banks simply cannot ever afford to let you fail. You now possess the ultimate systemic leverage to entirely dictate the terms of your debt. If you cannot make your payments, the massive bank does not foreclose on your properties. Instead, they panic and immediately offer to restructure your massive corporate debt on favorable terms. They lower your interest rate to absolute zero and extend your repayment timeline by decades. They will often readily lend you even more money just to keep your loans performing. You are no longer viewed as a standard retail banking customer. You are systemic risk. The ultimate depressing punchline of this entire global financial structure is where the money originates. The major corporate banks do not actually possess the billions they lend to the ultra-wealthy. They utilize the collective daily cash deposits of the people permanently trapped in levels 1. The poor and the middle class blindly store their survival money in standard savings accounts. The massive bank pools that capital and immediately lends it to billionaires at prime rates. The billionaires use that cheap financial leverage to buy the assets the middle class rents. The punishing interest rates paid by the poorest directly subsidize these massive, cheap corporate loans. The global financial system is not broken. It is functioning exactly as it was intended.